What is up, you guys? Welcome back to my channel. In this video today, I am going to go over how you are going to win in the stock market. So without further ado, let's just get into it. What is up, you guys? If you are new here, what is going on? My name is Nikki, and it would mean the absolute world to me if you would consider subscribing by hitting the NB in the bottom corner or the red subscribe button. Join the crew, join my journey. I post 2 times a week on this channel, ranging from faith, finance, business, real estate, sexuality, literally any and everything. I believe that everyone is on a journey and everyone's journey is worth sharing, so I just document my steps along the way. So if you're into that, or if you're into just hanging out with me half as much as I love hanging out with all of y'all, please consider subscribing. Alright, y'all, so with that spiel out the way, let's go ahead and get into this video. So there are really like 6 things I'm gonna bring up, and I'm not gonna be talking your ear off. I hope not too much. My videos tend to be a little bit longer, so it is what it is. Through my journey of investing, when I started in December of 2019, so really not that long ago, I have learned a tremendous amount of information about the stock market. I've learned about how freaking many strategies and concepts and people's inputs there are in regards to the stock market, and who's right and who's wrong and what works best and what doesn't. And you know what, to be honest with you, these 6 things I'm about to share with you, they're gonna kind of change your approach maybe to some things with your investing. So you guys make sure you stay to the end, because the last tip is really helpful. I believe that it is the most important thing to remember when investing. So the first thing that I'm going to bring up and talk about that is going to help you win in the stock market is pretty simple. It's a very simple kind of investing / profit making 101 here. You buy something that is undervalued. So you buy low. Buy something less than what it is worth. So how do we do that? Well, there's 2 ways that I really like to kind of evaluate a company. I shouldn't really say the company. I mean, it is a company, but the stock in relation to the price. For me, 2 things I look at are PE ratio, which is price over earnings per share, and then the PB ratio, which is the price over the book value. So you guys, if you know me, if you don't know me, I do basically all of my bulk bread and butter investing through Robinhood and the Robinhood app. You can see the PE ratio under a stock with all of its kind of like data and information. Here, I'll pop it up on the screen for you so you can check it out. So what you're looking at is Coca-Cola, pretty solid. As you can see here, I have 10 shares. I'm up a little bit today and overall, but right here where it says stats, right down there above the dividend yield on the right hand side is the PE ratio. So essentially what you're looking for, I'm not gonna go into like depth about the PE ratio because Robinhood, it's so nice, it's just on there right there for you. Ideally, you want it to be like 10 or below would be a great undervalue. It would be like something you probably seriously would want to invest in if you had done other research about it or whatever. But in regards to just the PE ratio, I think 10 to 15 is solid. I think it's a good deal. I think anything over 15, especially over 20, is a little bit just too overpriced. So that is one thing that you're gonna wanna look at when looking at the actual just stock price to figure out, hey, is this a good buy at this price or not? So the second thing that I wanted to talk about was the PB ratio. So since this one's not readily available on the Robinhood app, essentially what you're doing is finding the price and you're dividing it by the book value. So to find the book value, you can go to something like NASDAQ.com, pull up a balance sheet. You're gonna take the total assets minus the total liabilities. So you're gonna take that number and that's your B value. So you're gonna do the current share price divided by the book value. For example, running off Coke, I believe that came out to be like a 2.4, and ideally you want that to be like 1 or less. That would kind of be your indicator of a very good undervalued situation on a company and a stock price. So it makes a little bit of sense, because if ideally you're looking for a PE ratio of 10 or below and Coke's was 19, and then we did the PB ratio and found out it was a 2.4, there you go, it's a little bit higher than that 1. So those are 2 ways to kind of really evaluate a stock price, and I'm really emphasizing the idea of a price of a stock because there's other things we're going to talk about that aren't necessarily related to price. I mean, if you want to just look at the PE ratio, for goodness sake, because it's right there on the app, that's very easy to do. Just remember 20 below, well, really like 15 below. All right, you guys, so the second thing that I really want to bring up and talk about in regards to how you are going to win in this whole stock market investing game is the fact that you need to keep yo little emotions out out of the game. Okay, just like if you're playing sports and you had a bad day, you can't bring it into the court, you can't bring it on the field, you can't bring it with you. You have got to leave it outside the lines because it just messes you up, messes up your brain. You can't play to your full potential, yada, yada, yada. Same is true when you're investing, okay? You have to keep your emotions out of it. Let me show you something, okay? Let me just show you. Okay, so I'm gonna pop up there on the screen for you my portfolio. You can see it's valued about almost $7,300, but I'm gonna show you something. Look, so we go back 1 week, I'm up a little bit. 1 month, even better. 3 months, kind of good. 1 year, all time. So actually today is the first time in a while that my all-time investment is in the green. See right here, this dip, okay? Look at this. 18% I was down. $1,300 because of Corona. But I started right around here. I think it was, yeah, December 17th, okay? And by March, I had lost $1,300. Now, had I let my emotions get the best of me, I might have sold some because my money just kept going down further and further. In the long term, and it's not even been long term, it's been like 2 months since that date, I have gained all that money back plus some. So you have got to keep your emotions in check. I am telling you, that is how you're going to win. So not only do you have to keep your emotions in check, but you need to basically take the emotions from the people who can't and use them to your benefit. I had mentioned before, the stock market is a market of fear, and I honestly believe that because all of the fluctuations and volatility that we see, or have at least seen recently since I feel like I've started investing, I'll just talk from that point, is based off of fear and media and news and people's emotions. So because of that, you're seeing these huge sell-offs, okay? And people are just taking their cash and running. They are bleeding red and they don't want to lose any more because this whole situation is so uncertain and they're selling off. That's when you come in and you say, okay, so everyone's freaking out, everyone's emotions are in this game right now. I'm steady right here and I'm gonna look for good ass companies on a very fine discount. I mean, literally everything was falling. Like bloodbath, okay? Bloodbath. You could buy, like I bought in at Boeing, it's like 50% off. There are companies out there that are 30 to 50% off that are good companies that have great financials that are gonna be here a long time. Here's the way to look at this, okay? I'm a girl, okay? I like, you know, like sneakers, and I like clothes, and I like to wear dress clothes because I'm a real estate professional and I sell real estate, so I like to look good. If I go buy a blazer at Nordstrom's for $180, which I definitely should not be doing that. I should be frugal, save your money. Let's just say I did. And then 2 weeks later, there's a huge sale and it's 40 bucks. Would I not buy another color? Abso-freaking-lutely. Would I try to sell that? No. Why would I sell it? It's running for 40 bucks. I bought it at 180. Why am I gonna sell it? Why wouldn't I just go buy another one? Because it's at a discount. If you like something at this price, you're gonna love it at this price. So just remember that. So be driven on facts, not fear. Read balance sheets. Are the companies profitable? Are they stable? What is going on with the company? Not what the media says about the company, not what this person says about the company, but the actual facts. So you guys, to kind of roll into the next little segment here from that one, you have got to study the damn business. You own a piece of a company. You are an owner in this business. So you have to start studying and thinking like an owner of a business. Know the business model. Know the financials of the business. The numbers cannot lie, okay? The facts, the numbers, the data, the sheets, they cannot lie. Know the product. Know the brands that they have, right? Like Pepsi has different brands, okay? They have different products. They are diversified, okay? We always talk about how we want our portfolios to be diversified, but the companies we invest in, pretty nice to have those be diversified too. And I know I've said this a million times and I'll say it a million times again. Own companies that you are a consumer in. You understand them, you use them, you love them. Quick little thing here. I was watching a little Warren Buffett clip on YouTube a couple days ago. He was talking a lot about how investing is like playing baseball, and this kind of resonated with me because I was a Division I college athlete, and so I played softball. Shocker. He's saying you pretend like you're the batter and the pitcher is the news, it's media, it's other people's opinions, it's advisors from up the yang, it's everybody's input, feelings, emotions, thoughts. So they're unleashing these pitches at you like, oh, buy this stock at this price, buy this one on Tuesdays and sell it on Fridays, because according to the history of the stock and the fundamental or technical analysis, they're throwing these things at you, these pitches, right? And he said what happens in baseball, you don't swing at every pitch, you swing at strikes. You swing at the ones that are coming right down in your sweet spot. For me, it was the lower inside part of the plate. I understood it, I knew it, my contact point was there, I felt strong, so I'm swinging at those. I'm not swinging at things I don't understand. If I have less than 2 strikes on me, I ain't swinging on the down low outside corner strike, because I'm not there. So get in your own groove, get in your own understanding of companies themselves, and stop swinging and taking hacks at what people say you should be doing. Like for me, I'm honestly like, until I heard that, I was kind of like, whoa, because I've bought into companies that I saw somebody buy and they were like, oh, this is a great deal and this is what's gonna happen with this and da da da, and I was like, okay, I'm gonna buy some. But I don't really understand it, like oil and gas. I don't know the ins and outs of that business. I'm way more into technology and stuff like that, and I should be focusing more of my time on that, or at least learning about oil and gas. I mean, right now, I don't know, but you get what I'm saying. You need to understand the business in and out, and you need to find your sweet spot. So the next thing I kind of want to touch on, ooh, ooh, choked on some Crystal Light. Next thing is actually something that I recently have started to really implement and like be disciplined and patient with. Prior to this, I was just throwing money in there. Like, I don't care what is going on. I am just gonna consistently and consecutively put money into this. But now I got a little bit better patience and understanding here that I buy stock only on red days for that stock. An ideal time to buy a stock would be if it's 5% down for the day. If it's 5% in the red, I'm thinking about adding either a position or adding more shares to something I already have. Sometimes if I'm feeling a little anxious or I kind of really want to grab something, 3% below is usually cool with me too. 3, 4, and 5, anything below 5 is like, you better grab it, especially if you already have it. So there's days where I'm like, dang, I really want to buy this. Let's say it's Apple, for instance, but it's a green day, it's up 6%. The actual price may be lower than what my average cost is, so it would still bring down my average cost, but I'm getting to a point where I'm trying to get very, very disciplined to make sure I'm not buying on those days where it's gained 6%, because there could be the next day it's literally down 8%. So I've just like gotten into this habit of really investing in opening or adding positions when it's in the red, and 3 to 5 specifically, and 5 below is like game on. And a little extra sprinkle on top of that little tidbit is that I have learned to not put insane amounts of money. So say I have, I don't know, let's just say I have $500 and I'm looking to put the $500 into one specific stock like Apple. If it's down 3%, I'm not gonna take all $500 and buy all of it at once. I'm gonna put 150 here on one day, I'm gonna wait, might drop down 6%, I'm gonna add another 200 here. So over the course of a few weeks, I'm putting money in on those red days and I'm not lumping it all into one day. That's a little tidbit because I was really bad at that. Moving right along, the next thing I'm gonna mention is, okay, so this is kind of confusing and I've tried to kind of like figure this out for myself and really understand this whole concept. But for me, I'm a long-term investor, okay? I invest in growth and dividend stocks, mostly dividend stocks, but also those with room for growth, okay, yada yada. Which means, hopefully, I will be in this stock game for years and years and years and years to come. And I've always talked about, like, I will never sell this, I'll never sell that, you know, this company will be around forever, it already has been. But here's the real sticky, icky truth. Nobody knows if those companies will truly, truly last for another 30, 40, 50 years. Nobody can predict the market. I mean, I swear to God, nobody knew that this whole thing was gonna happen with the virus. Okay, if you would have told somebody that a virus, an illness, is going to wreak havoc on America like this, they probably would have laughed at you. That really made me understand, like, no, you literally have no idea. So a tip that I'm trying to implement into my own strategy here is, yes, I'm long term. Like, yes, I still wholeheartedly believe in things like Coca-Cola. I think it'll be here forever. I don't know that, but I really do feel that way. But what I've started to do is look at long-term outcome, but breaking it into like 3-year stages. In the next 3 years, I feel like you can have a pretty good understanding of kind of where things are gonna be. I mean, you really don't know. But I'm just saying, looking at something at a 3-year time frame versus a 30-year time frame, it's a little bit more digestible. So if I feel like a company can survive, thrive, and continue for the next 3 years, and I believe in that company and I've done my research, then I will continue to add to my position in it. Like for example, I invest in Peloton, the fitness bike, the fitness subscription. I absolutely love it. I use it all the time. So if I'm thinking like 30 years, I honestly really don't know what's gonna go on with Peloton. But 3 years from now, I'm thinking this is good shit. Okay, especially with what is going on right now. I think it was a great thing for Peloton. I think a lot of people started to use it. Therefore, a lot of people started to love it. Therefore, a lot of people may stay with it even when gyms reopen and things go back to normal. I don't think that gym goers are going to be so fast to get back. I mean, some definitely are. But all I'm saying is even like a year after gyms reopen, I still think Peloton is going to be a great company to be in. In 15, 20 years, I don't know. Or is it gonna be just like it's over, there's no more growth potential there? Do I cash out for some capital gains? I mean, I have to reevaluate, but at a 3-year level, I can clearly see like, okay, the next 3 years, I'm team Peloton. I'm here for it. I'm gonna keep investing and try to grow my money. Makes things a little bit more easier to chew. All right, so I went ahead and I told you at the beginning of the video, this tip is gonna be the best. I feel like it's the most valuable tip. I may have already kind of said it, but it's honestly, you guys, it's honestly just keep it freaking simple. Just like with any sport, the more you overthink, overanalyze, the more statistical you get, the more this or that, the more in your head you are, you're gonna mess up. So just keep it simple. If you like drinking Pepsi Cola, buy some Pepsi Cola. I mean, keep it simple. That is the best advice I can give to you. Stop overanalyzing, stop listening to others, keep it in your lane, keep it simple, keep it fun, keep it fresh. Because if this is long term for you, you're gonna continue to do this for the rest of your life. You don't want it to be confusing and irritating and stressful. That's why I don't really do trading, although I'm trying to understand that a little bit better. All right, guys, if you made it this far, please slap, destroy, tap, poke, push that like button for me. Honestly, it means the world to me. It really helps the YouTube algorithm push my content out to people, which I would appreciate. And if you are not already subscribed, please hit that subscribe button. And if you made it to the end of this video, you are the real MVP. Come here, you know I love you. And like I say at the end of every single one of my videos, you guys, enjoy the journey, whatever your journey is. And always remember to do what sets your hearts on fire. And I will catch y'all in my next video. Bye, guys.